Let's bring in Paul Schatz, president of Heritage Capital, and Brian Nick of Nuveen, where he's the chief investment strategist. Good morning to you both. Paul, I will start with you. I know you as a pretty upbeat guy, but when you see a market like this that got hammered on Monday, it will be hammered again today, hammered yesterday. Are you all in cash?
No, I think, so that's the common question from people is, when do I pull the ripcord? If so, when do I pull the ripcord? 31 years in the business, here's what I've learned. If you weren't smart enough near the peak to take some action, personally, I've always found it difficult to pull the ripcord into what is probably the biggest panic since either '08 or '87. So I don't think, for me anyway, I think the answer is you close your eyes, swallow hard, and if you're uncomfortable with the risk you have, you wait for that first bounce. The first bounce will come because there's always a bounce, whether it's today or tomorrow or early next week, but eventually there will be a very sharp bounce from this because clearly markets are not going to zero. But I think when people panic just emotionally, that they may feel good for a day or two, but after that, they look back and say, I should have held on.
Brian, what are your thoughts? When do you pull the ripcord?
Yeah, the problem is if you're asking somebody to take a leap, but you're not telling them how deep the hole is, because we don't know. This is a healthcare crisis at its core, and I think the reason you're seeing the response from the central bank actions, both the Fed and now the ECB, and also from the president's speech last night, is there's not a solution yet. There's not a proposed solution to the healthcare crisis. So what we're looking for is not a certain economic number, jobless claims, unemployment rate moving up or down. It's really, when do we start seeing a succession of an increase, a daily increase in the number of new coronavirus cases in the United States and in the affected countries in Europe? And until we see that, I don't think we're going to be increasing risk at all. Now, at the same time, we came into this relatively defensively positioned in the credit markets and in the equity markets. So I don't get the sense that our portfolio managers are paring back risk even more. But are we bottom feeding? Are we trying to go for names that have gotten beaten up the worst in energy or industrials materials? Not until we see a sign that there's going to be a light at the end of this tunnel and we kind of know when we're going to hit it.
Brian, and don't laugh at this because I have gotten 3 emails in my box regarding a potential Great Depression. And I can't believe I'm even asking these questions or I see this stuff in my box. Are we there yet? Is the coronavirus likely to trigger something like that? And that what might be the market is starting to price in?
I think that's an extreme scenario. The fixed income markets are certainly pricing in a much worse scenario at this point than, say, equity markets.
So we're still at recession, trying to price in a recession.
It depends on how long this lasts. We could get a really deep V-shaped growth pattern here. If this is sort of like the lights going out in your house, right? You don't know when they're going to come back on. You have to start behaving accordingly or changing your behavior patterns. But when the lights come back on, we'll have to see just how much damage was done to the economy. I think the NBA is actually a really good kind of metaphor for this. At some point, the NBA is going to start playing again. People will be back in the stadiums, but there'll be that kind of lost period where there weren't any games and there wasn't any revenue coming from it. But at some point, people will be back in those arenas. So I think that's what we're looking for. Is that going to be a Q3 story? Is that going to be a June, July, August phenomenon? Or if it gets pushed into Labor Day in the fall, now you're looking at an extremely high chance of a recession Q2, Q3.
Mm-hmm. Paul, the market did not seem to like what President Trump had to say last night. Are investors looking for a coordinated effort with central banks and governments around the world right now? I mean, yesterday, President Trump basically blamed Europe for continuing to spread the COVID-19, saying they didn't do enough to contain it. Is it looking less and less likely like we're going to get a coordinated response? And what's Wall Street going to do with that information?
I think you're right. As I listened to his speech and had the futures on my laptop, I kept waiting for that kind of, that Churchill, Roosevelt moment. Certainly didn't come. First of all, the blame game is helping nobody. I think the problem is the president is still too worried about being reelected. And from my seat, recession's a foregone conclusion. Because remember, just because we're down one deep quarter could be a recession. So it's not that what we all think, it's that 2 quarters of negative growth. That's what people kind of have always been taught. That's just not true because an arbitrary group decides when you're in recession. But I think the president did not help his cause, help the American people. People wanted to feel like we had a commander-in-chief who was totally in charge, taking the bull by the horns, and really having a multi-pronged approach. And I think he got partial blame game, partial policies that the Republicans in Congress don't even support. So I think there's a problem in leadership right now. And regarding the coordinated effort, frankly, I said this on February 29th, the markets were looking for first a coordinated effort from the global central banks. And if that didn't work, then some kind of global coordinated effort from the governments, like stimulus with Germany, Japan, and the United States all together. To me, it seems like too many of the governments are still running around with like chickens with their heads cut off versus coalescing, coming together, and making this a global moment for everybody.
All right, Paul Schatz, Brian Nick, want to thank you both for being with us on really what is shaping up to be a historic day for the markets.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.